Aloha, everyone. Joshua Hayes at BigWaveTrading.com. It was another overall pretty ugly session for the market, just based on the fact that it tried to bounce and just completely failed and went ahead and sold off with us closing lower on the NASDAQ on higher volume, and the New York Stock Exchange basically closing flat on about break-even volume. The Dow Jones Industrial Average also finished lower, and the S&P 500 also finished lower on above average volume. So overall, the market still doesn't look healthy. But despite the market not looking healthy, and despite what I said yesterday with the new long positions, a very odd thing happened today. My perfect speculator scan was loaded with actionable signals. So here's what I do on my end. I have to always keep a toe in the water. If I don't, and if I personally fully step back, then I'm never sure how much to start with when I come back in again. So instead, when the market gets like this, I just continue to reduce position size per signal and keep tighter and tighter stops. And also do what I've been doing on stocks like EDUC. Every time this stock moves higher, I split my stops up and move one to the most recent low a day. So as of yesterday's close, my closest stop actually was at the 26th. Well, following today's session, I'm going to be splitting it up 2 times and moving one to right below the 27th low a day and one right to today's low a day. So as long as I'm doing that, when stocks finally do start crashing like ZN, they go through half of my stops here, some of my profit stops here, and then another final profit stop here before then taking out my 2 final sell stops. Now, it did reverse on the day, but the movement's kind of like that is why it's dangerous to be long, because even when you have gains on the way up, when stocks start reversing, they reverse hard. Look at ADMA. Now, I've raised stops on ADMA, had one here, boom, it reversed here, knocked me out of one. I added another one here, boom, today knocked me out of this one, and it knocked me out of this one. So every day a stock goes up, I'm splitting my stocks and raising it higher because I can afford to do that. Only $1 every time I trade, and with the account capital at work, taking partial small profits on the way up is still taking care of all the small losses when I'm wrong. Now on the flip side, if you're a new trader, if you have a high commission cost, if you have a lower account size, it's still not time to enter the market. Wait till everything's in your favor. Seasonality, right now it's in our favor. The market, right now that's nowhere near in our favor. And individual stocks, the vast majority are terrible, but there's still some working, like I said, like EDUC and the QHC that I couldn't get a hold of. And then, INFU, and then recently SSTI yesterday, and HLG hitting new highs. So I'm still long enough stocks that are moving higher to make me question, what the hell is going on in this market? I have to admit, I haven't been this confused about what the market wants to do since I can't remember. I cannot remember being this confused. Brexit was a pretty confusing, like short-term moment, but overall for the past few days, weeks, and the past couple of months, the market, can't tell. Are we going to bounce here or what? Overall, I would think it's not healthy, and longer intermediate term, we're probably in trouble if we don't start bouncing soon. But the bottom line is it's really confusing, and if I'm confused with all my years of experience, I'm sure new traders are very confused. And now I'm 100% certain, and I know for a fact I am not the greatest trader out there, but I stand by my market analysis, my risk parameters, my being careful in markets. And like I said, I got a lot of long positions this evening, but not a single one is going to receive more than 1% of my capital. And you'll see I only have one stop on every name. So if you're a new trader, sit back and watch and see how these work. Now, if I go long all of these stocks and they all fail for small losses, combined, it's a death by 1,000 paper cuts. It's not been a good year for me. I am now red for the year to date in my largest trading account that I use for these end-of-day positions after yesterday's session. I'm red. There's nothing I can do about that. I still have to piecemeal. If the market turns higher, all the stocks I'm long, they're going to produce gains. I'll be back in the green, and as new positions trigger, and if the market continues to do higher, I'll outperform the market. If the market continues to roll over and the market gets really ugly, I got those hedges, my losses will be cut, and my losses will be tiny compared to the big market losses, so I'll have outperformance there relative to the overall market, and then when we turn, I can push. But guys, since February, have you seen me place more than 2.5% of my account capital into any one new long position? That's all you need to know. Until you start seeing me taking 5%, 10% of signals, basically 10%, 5% of my capital per signal, you can be sure you need to be very, very careful and tight here. So really quick, I don't even want to spend a lot of time with them. These are the new long positions. Boom. This was in my CanSlim Perfect Speculator scan. Home. This was in my CanSlim Perfect Speculator scan. Titan. This was in my Perfect Speculator scan. XRM. Perfect Speculator scan. Lane. Perfect Speculator scan. ASND, Perfect Speculator scan. CMTL, Perfect Speculator scan. ARGX, Perfect Speculator scan. Now the one thing all of these have, look at their previous uptrend. So for ARX, look at this previous uptrend, okay? CMTL, look at that previous uptrend, okay? ASND, look at that previous uptrend. Lane, XRM, TITN, Home, Boom. That's what I'm expecting to one degree or another, maybe a quarter of it, half of it, all of it is the goal, compared to extremely tight stops that I'll be using when I start going over them right now. So boom, I'm getting along at 27.25. It doesn't work. Right there, I'm out. It goes below that low right there, 25.60. I'm out. 25.55. 0.5% of my capital. Y is extended from the 20-day moving average. Home, once again, 0.5% of my capital. Y, it's extended from the 20-day moving average. Limit order 31.62. There's my stop right there. 28.99. Goes below 29. I'm completely out of home. Where the green bop ends, that's where my long ends. For Boom, you could even use 25.65, but I figure since it's an extra 10 cents, I'll go to that lowest bar just a few days ahead of it. But Home and Boom, they're both extended, but they're both CanSlim Perfect Speculator stocks. They both have good chart patterns despite this ugly market showing high relative strength. If the market turns higher, I assume these are going to explode higher. Then I have an add signal in my CanSlim Quality BY stock that's also an IPO stock that was also in my Max Green Bop for 5-day scan. 23.15 is my limit order. There's my cut loss right there, 22.13. 1% of my account capital. Why? Because it's not extended. Very low risk. Big potential reward if it does its previous uptrend, 20%. I risk about how much if I'm wrong? 4%? 5-to-1 reward risk ratio. Take it all the time. And what you could even do here with this signal, have half of your stop at 20, which I'll probably do, 22.65, and then the finals at 22.13. So I'm actually going to probably have two stops, 50% at 22.65, the final 50% at 22.13. Then there's TITN, Perfect Speculator, also confirmed in my price volume bop surge scan, 1%. 1986, there's the stop, right there, 1904. Goes below 1905, I'm out. XRM, Perfect Speculator stock, extended from the 20-day moving average, 0.5% of my account capital, 664. There's your stop, right there, 636. Moves below 637, I'm out. Now I might have a second stop here. We'll see. I'm willing to give it some room, but you definitely should not if you decide to take this. Lane, this one's pretty damn easy. Limit order right there, 14.46. There's your stop, 14.06, right below yesterday's low a day. It's right there. ASND, 1% of my account capital because it's not extended. Limit order 63.74. Your one and only stop, right there, 59.17. You don't risk it much at all if you're wrong. The stop is right there. If I'm wrong on all of these, I will not lose much at all. CMTL, limit order 29.24. Your one and only stop, right there. Today's low day, 28.61. Now I might be a little bit more loose and have a final stop at 26.51 since it's only going to be 0.5% of my account capital since it's extended from the 20-day moving average. But I'm just telling you what I'm doing. You probably shouldn't touch it. All the 0.5% ones, XRM is extended, throw it out. CMTL, throw it out. Boom, throw it out. Home, throw it out. It's extended. If you want everything to be very low risk and not extended, you got BY, you got Titan, you got Lane, you got ASND, and then you got ARGX. ARGX, limit order, 79.48. It doesn't move higher immediately. You get completely out right here at 76.41, or you're a little loose like me and you get out at 75.48. Either way, you don't risk much if you're wrong. If the market does turn and runs here, I'm going to hate myself for being afraid of taking new long positions just because the market's crazy right now. In March, April, you got to take long positions. That's what my back testing shows me historically, going back 120 years. That's what my real-time trading tells me. No matter the market environment, you still take the signals in March and April and cut your losses. Now, if these signals show up in May, I don't take home. Home's extended. I don't take it. I don't take boom. BY, I still take, but maybe that's only 0.5%. Titan, I still take, but maybe that's only 0.5%. XRM, I don't take. Lane, ASND, ARGX, same thing. Maybe I take them in May, but it's only 0.5% of my capital. CMTL, I don't touch. So you just got to know the market environment. Like I said, I've never been this confused, or I have been before, but it's been a very long time since I've been this confused about what the market really wants to do. Would have thought it would have had its dead cat bounce by now, but still hasn't. So maybe we're trying to base out to have a really powerful rally. I can't quite tell what's going on. I just know the market looks ugly. And when I see stocks like Tesla and Facebook trade the way that they are, or Microsoft reversing, it's a gap up bar, I just know that overall I want to be very careful, want to keep tight stops, want to cut losses. And I don't mind taking small losses in little shapes and sizes so that I can keep my toe in the water, so that then whenever the market does turn, I've got the right seasonality and the right patterns I can push. But right now is not that time, so you may want to sit on the sidelines. But I want to give you an example of why, sometimes I want to do things, because PetQ, remember how I flagged PetQ yesterday? Boom, that sure did work. That was up 3.79% today. NWY, you can see that one's still basing out sideways. CCT, I didn't take, but if I would have gotten it from the entry, it would have been higher today. And then INPX, even though it's a spec stock and it's nowhere has a chance in hell of any spec stock entering my portfolio until the market turns, it still didn't quote completely fail, even though it didn't work today. But the mere fact that some of those stocks like PetQ worked is still an indication that the market isn't as weak as it seems, because every time the market pulls back the way it does, I still don't have 200 stocks that I'm tracking on an end-of-day basis that I'm either long or tracking that's still in an overall uptrend. When a market looks like this, I don't even have half this many. In 2016, when we hit those lows and rebounded higher, I believe I was only long/tracking only 30 stocks. And that downtrend wasn't even that serious. It's right here. You can see from the highs to the lows, the NASDAQ wasn't even down 20% on an end-of-day basis. But just that pullback right there, at that bottom right there, 30 stocks I was tracking or long. Right now, it's still at 200. How weak is the market if I'm still tracking 200 stocks that are in overall quote uptrends? What means they haven't set a series of 3 lower highs and 3 lower lows, or failed below my final cut loss level from the original entry. So it's a very confusing market. I'm sure it's designed to shake most traders out that are weak, but the strong will prevail, will survive, and hopefully thrive later on. But for now, it's still tricky. But until April's over, my inclination is to go long stocks, just not in big size. So trade accordingly, and or do not trade at all. Safety is still the priority here. If you trade, you gotta keep tight stops. All right,